Vicky, thank you for joining us on this news hour. With this report coming out from the World Bank, what's the bigger impact here on the rest of the world? We're already seeing rising food and fuel prices.
Absolutely. And of course, although in the realm of things, the overall imports and exports of Russia and the Ukraine aren't that great. They are particularly significant in some areas, such as oil and gas, as we know, and such as wheat, for example, fertilizers, where the percentage coming out of those two countries is very, very significant. For example, for fertilizers, Russia accounts for about 15% of global trade in fertilizers. And of course, when it comes to wheat, Russia and the Ukraine account for something like 30% of all global exports. So absolutely right. There is a serious problem about prices, but there is also another serious problem, which is what happens to the entire region, because the World Bank in its report also looked at the Europe and Central Asia region and has concluded that because of what's happening in Russia and the Ukraine, that region will also see a drop in GDP this year. Particularly for the countries quite close to Russia and the Ukraine, but also more generally. I think it's forecasting that they will see a drop of 4.1% in GDP instead of an increase that they had originally of something like 3%. So it is not just what it does for global food prices and so on, but also the region where Russia and Ukraine are, which has tended to be very dependent, particularly on Russia for exports and imports.
And Russia, of course, is feeling the impact as well with those growing sanctions on Moscow. But before this incursion by Russia, we actually heard a lot from the Kremlin saying that they had built up reserves to counter Western sanctions. Are they able to now actually cope?
Well, as we know, half of those reserves have been frozen by the West, although we understand that perhaps they were using some of those reserves to pay what they were due to pay for bonds that they had basically raised to increase their sort of government funding. So there are a number of bonds coming due or payments coming due, which the Russians have been keeping the payments for, which is actually quite good news. So we haven't seen the default yet happening that many people were forecasting in terms of sovereign debt default in Russia. So half of that, nevertheless, being frozen suggests that, in fact, the firepower, if you like, of Russia is reduced from that point of view. But what they have done, they have imposed capital controls. So the ruble has strengthened as a result. They've increased interest rates to 20%. They've just brought them down to 17%, as I understand it. It was at just 9%, the central bank interest rate. So they have used all sorts of ways in which to protect the currency, but also, of course, ease some of the cost pressures on their own people. But you're absolutely right. I think there is a limit to how much they can do with those reserves that they have outside the country, because for the moment, they find it very difficult to use them. And loads of banks, of course, have been sanctioned. The SWIFT system, which is a payment messaging system, doesn't now work for a very large number of Russian banks. There's still some that can use it, and a lot of the gas and oil payments that the West is making is going through those banks. But now, again, in this area, the Russians are saying they want to be paid in rubles, and that is causing quite a lot of uncertainty in the Western world.
A lot of uncertainty indeed. Vicky Pryce, thank you so much for giving us that analysis.